After a disappointing report on the U.S. employment, the U.S. dollar is trading near its 10-month low. Under such labor market conditions, the U.S. Fed will hardly raise the key interest rate and show flexibility. At the same time, there are risks that inflation will spiral out of control. This may force the regulator to change its stance. Today, traders will learn about the changes in consumer prices that took place in April. Besides, other important macroeconomic reports are slated for release later this week. On Thursday, May 13, the US will report on the number of the first-time unemployment claims for the week that ended on May 8. According to the forecast, the indicator will resume climbing. Investors expect a rise of just 2,000. Nevertheless, the figure of 500,000 new claims may disappoint investors. Data on the continuing claims is also rather negative. A too slow decline in the indicator may result in a weaker dollar. On Friday, traders will focus on the ECB monetary policy meeting results. The ECB will publish the report on the meeting held in April. Unlike the Fed, the ECB does not worry about an overheating economy or unprecedented inflation growth. During the meeting on April 22, the European Central Bank decided to keep the monetary policy unchanged. The regulator's officials took the wait-and-see approach after the decision to conduct purchases under the PEPP at a significant higher pace in the second quarter. Moreover, President of the ECB, Christine Lagarde, made optimistic announcements. She said that in 2021, the economic activity might show a confident recovery. However, the short-term economic perspectives remain vague. Notably, the euro showed almost zero reaction to the results of the meeting. During that day, the euro-dollar pair was moving sideways. It's quite possible that on Friday, traders' reaction to the news against the US dollar will be more obvious. On Friday, since the beginning of the trading day, market participants are likely to take a close look at the US retail sales data. Economists foresee a significant annual jump. Of course, the annual rise will be really high due to the low base effect. A year ago, when the pandemic broke out, consumer activity was almost at the zero level amid the imposed restrictive measures. However, on a monthly basis, the US retail sales may inch up just by 1%. Notably, the retail sales data is one of the most important indicators of the US economic condition. In the US, consumer spending accounts for about 2/3 of the country's GDP. It means that such a sharp slowdown in the retail sales growth may lead to the US dollar sell-off. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals with InstaForex.